The way I invest changed completely when I understood these three things. When I first started investing, I was obsessed with Stock Screener. Screener is a tool that helps you to filter stocks. You can input certain data like the growth rate or the profits. I thought the more data I look at, the smarter my decision will be. But after a while, I realized something strange. I was spending more time but not necessarily investing better. Then, until I came across this book, which is called The Warren Buffett Way. You see, most investors focus on the wrong things. They chase quarterly earnings, target price, or how fund managers buy or sell. But the right question to ask is, how did Warren Buffett build his fortune? The truth is, great investing isn't about predicting what is about to happen next. It's all about looking and understanding businesses. Warren Buffett framework forces you to think like a business owner and not a trader. 3 questions change and shape how I look at companies. Question 1. Is the business simple to understand? If you can't explain in one sentence how a company makes money, it's most likely a very complex business to understand. Because if the business is complex to understand, we might miss out certain information and simply could not paint a good picture about how likely they are going to make money. Number 2. Retained earnings versus shareholders' return. Buffett once said, the test of management is how efficient they convert a dollar of retained earnings into market value. If profits are retained year after year, but the company's value do not grow, that means that the reinvestment decision might be poor. So the value here refers to how much the stock price has gone up over time. And reinvestments are things like how the company uses the funds to either give dividends, buy back their own stock, or even do acquisitions. So what we want to look for is to see over the past few years, has the retained earnings been positive and growing at the same time? This way, you will be able to know whether did the management retain the earnings and still able to bring the stock price up. Number 3, is the company generating excess cash? The free cash flow simply measures how much cash is left after the company runs its operation or reinvests the remaining funds or choose to grow its business. So ignoring these 3 questions is like driving at night but without your headlight on, where you cannot tell where you are going. You don't need to be like Buffett or spend hours trying to look for all this information. Upload a company's 10K into ChatGPT. Use the custom prompt. If you find yourself lacking a structure to invest in, I would like to invite you to Deepmynd's Thanksgiving event on the 8th of November. DM AI and I will send the link over to you.